The financial literacy problem in India is real. 73% of men and 80% of women are not financially literate. This is to say, the decisions we make when it comes to investing, which is really parking our money in fixed deposits, in recurring deposits, or really investing our money in products we don't understand, comes from the fact that we don't know about them, and we need to start building our learning from there. As per the Monster Salary Index, the gender pay gap in India is 20%, which means if an average man is earning about 10 lakhs, an average woman is earning about 8 lakhs. We can spin into an argument about how we should bridge this, when are we going to get there, when is there going to be equality. But I'm going to have a different take on this, and I say if there is a gender pay gap and if we're earning lesser, it probably means that we need to start investing in a much better fashion. Starting with probably expense management. I think expense management is the root of any savings and investment planning. If you start planning your expenses, or if you start managing and monitoring them at an early point in time of the month, it helps you understand by the end of the month where you're headed. Also, when it comes to investing, I think there is a big hurdle in our brain where we think we need to start investing with huge amounts. It's important to note that you could start into an equity mutual fund by investing in an SIP as low as ₹100. I think any average earning person can invest anywhere between 1,000 to 5,000 rupees quite easily without having a hit on any of their other expenses or any of their probably lifestyle costs of a month. Irrespective of how much you might be investing every month, whether it's 1,000 rupees, whether it's 5,000 rupees, the compounding effect comes into play, and the rewards of these small amounts of money amount to huge corpus over periods of time, say 7 or 10 years. A very important factor when it comes to women and investing is, like everything else, we need to be smart when it comes to making our investments. Set up a fixed date for your SIP, ensure you have that money in your account on that particular date and it's moving into the fund as it is predetermined. Also, when it comes to investing, I think it's very important to be open to asking questions, open to seeking answers, but also seeking answers from the right people. When it comes to financial investing, I would say seek answers from advisors, seek answers from the experts, and not depending on friends and family for that. Being women, to our advantage, there is a little less ego when it comes to asking questions, where unlike men, we're not open to asking for directions or asking what to do next. So I think that makes it simple for us from a behavioral standpoint. But yes, I would only say ask the expert. So we spoke about how we could probably avoid making mistakes by keeping our own ego at bay. I'm going to be talking a little bit about how we also need to be cautious when it comes to investing into equity-oriented mutual funds, because invariably, yes, they are investing into the equity market and they're the stock markets, and we should tread with caution. My advice to you would be, actually, when the markets are probably falling or there is some volatility, it might make sense to you to up your SIP game. You should probably increase your SIP if you have the capacity to do so. It is also important that when you do have a salary review, when you do have a bonus amount in hand, you should look at how you can invest and increase your investments like you would probably increase your expenses. And I tell everyone this: enjoy your investing like you enjoy your spending. In one place you're building a corpus, in one place you're depleting your income. I think 3 important factors you need to keep in mind when it comes to investing as a woman is 1, be realistic, 2, know yourself, and 3, say no to peer pressure. When I say be realistic, I've seen several of my clients and investors falling short, usually due to their own unrealistic expectations of how their investments are going to grow. I think it's very important to stay realistic when you are investing. Probably encourage yourself to stay invested over a longer period of time. Don't lose patience. While A, it's important to have money to invest into an SIP or stay invested, B, I think it's more important to be patient when it comes to investing. Knowing yourself is probably as important as being realistic. Only if you know yourself, your needs, your unnecessary expenses, what your real requirements are, what your real wants and financial goals are, it probably helps you establish some sort of structure when it comes to investing. You need to keep committed and maintain your own zeal when it comes to investing. So what is the biggest factor where people make investment mistakes? I think that would probably be leading into peer pressure. Peer pressure is the number one factor why people make mistakes in investing. Don't just do what your friends or family members are doing when it comes to their investments. It's not as simple as buying the same mobile phone like someone else has. They are investing according to their financial goals and their risk profiles. And hence, you need to invest in line with your financial goals and what your risk profile is. While somebody may be investing in a very high risk investment or in a very low risk investment, you probably, based on your structure, need to be investing in a moderate risk product. I think keep in line what goals you have in sight and head towards your goals instead of somebody else's. Another key factor to consider is life expectancy. Currently, women's life expectancy sits at about 70 years of age and men at about 67, which means that women will probably live longer than men, and keeping the current number in mind, live longer by about 3 years, which means the financial literacy is truly required by the women. In fact, based on latest research, women also invest much better than men because of the temperaments that they maintain. That's a basic lesson of investing in us. All that when it comes to investing is within us. It probably takes putting a plan in place, using an expert, and just getting started.